Good morning, everybody. You're watching SmallCapSteve Live. I am your host, SmallCapSteve. We're going to be joined by Jay as well. We got a big guest today, Anthony Milewski. He's got a big history in junior mining. Excited to kind of pick his brain and learn a little bit about some of these battery metals that they're mining. He's got quite a bit of success in the space, and he's also a pretty talented writer. We were joking beforehand that it's a shame that we can't hire him for $20 an hour. Broad market, things seem pretty mixed. This economic experiment of printing massive amounts of money have made the market not really sure how to react. Gold's back up around 1836. That's nice to see. The 10-year yield is down. Lumber is back almost at $1,400. So maybe a full parabola there. Bitcoin above 50,000. The Russell is having a good day. Something we care about. All right, guys, get ready for the big Friday show and buckle up. Let's get started. Anthony, thank you for joining us today.
Hey, thanks for having me, bud.
So where do we get started here? I actually don't know a ton about your background. I know that you've got a bit of fame for some of the stuff that you've written in the past. You've got a large following on Twitter. So I'm looking at my notes here that my research staff put together. Did you go to law school?
Yeah, I don't know why, but I did go to law school. I went to law school at University of Washington in Seattle, and I never really practiced law. I went to a law firm briefly in Russia. I went to London, ended up in Russia. It was a bull market in Russia, and worked on a bunch of natural resource files as my first job, really. And I think that sent me down the path of investing and thinking about and banking natural resource companies. And so just sort of fortuitously, I ended up in the space.
So did you grow up with like a family that was in junior mining, or did you just kind of find your way here?
You know, I grew up in Eastern Washington. I mean, I had families that were farmers, construction workers, kind of just a normal blue collar, middle class kind of upbringing. And I would just say that I ended up here by chance, enjoyed it. I like the outdoors. I like physical things, and materials are real. If you look around the room that you're sitting in right now, almost everything you see is either mined or grown, if you think about it. And so it's real, unlike some things that you can be involved in life. And seeing a port is fascinating, and a digger and all these different things. And so I was just kind of gravitated towards the physicality and really the gravity of these sites. If you go to a mine, you're going down this shaft or you're going this massive open pit, and I found that to be interesting.
Mm-hmm. Okay, so right now you're working on Nickel 28. We can get into that in a minute, but just from sort of reading some of your stuff and looking into your background, it seems like you're pretty passionate about this whole decarbonization movement. So let's maybe start there. Has this always been a passion of yours, or are you one of those kind of blunt people who's like, I'm here to make money? What's sort of the story?
Yeah, no,
behind?
I mean, I grew up, I love fly fishing and I love the outdoors, and I've always cared about the environment. And for most people, I don't think you really have an opportunity, as it were, to do something about the environment. I mean, fine, you can use less plastic cups and so on, but I think what I identified, maybe 6 or 7 years ago, was this transition. And at first I was really focused on electric vehicles and some of the technologies that were emerging. We looked at nickel and lithium and cobalt. But I think what I came to understand as things evolved is actually this is a much bigger geopolitical play with China around the advent of what's a new automobile industry. It's around controlling resources globally. As economies transition to a green economy globally, you need to control copper. And so it became even more fascinating to see how we're rewiring, as it were, the world for a new kind of energy, or for a kind of energy that needs to be more ubiquitous. And that really plays well into not only resources, but also kind of politics and a bunch of other things. And so, it started off focusing on electric vehicles, but now it's really come to touch a bunch of aspects of our lives, including like the power grid and almost everything that you do is once again tied back to copper and nickel and these basic materials.
Yeah, it's interesting you bring up how the world's sort of switching to this EV sort of world. This week, Fisker announced that they're launching their $30,000 car with Foxconn, which is, I mean, I don't know if any of these experiments are going to work, but you've got a company that's effectively making iPhones that is suddenly going to start mass producing vehicles for your everyday person. Like, when you do your modeling and you look at the future, are you sort of thinking about sort of that the whole world's going to be on EVs in 5 years? Do you think it's going to be concentrated
so I
in
think
the big players? How do you see it?
Yeah, so the narrative is a little bit wrong. So certainly electric vehicles are going to be a big part of the mix, but actually it's going to be more complex. And so, for instance, if you have a fixed route, like a bus in the city is a fixed route, or a semi driving from San Francisco to New York is a fixed route, that's likely going to be hydrogen. If, mostly we talk about nickel, manganese, cobalt batteries, or nickel, cobalt, aluminum batteries, which are kind of the Tesla longer cycle batteries that can drive further distances. Well, guess what? If you own a car and you live inside of San Francisco, you don't need that battery. You could have an LFP battery, which is an iron, like a lithium iron phosphate battery. By the way, if you have solar on your house, you could have a situation where you have a vanadium redox battery in your neighborhood and everyone's solar is funneling into that. And so I think what happened was when the narrative came out, everyone jumped on this idea that we're all going to drive electric vehicles with lithium ion batteries. And while I think that will be probably the largest percentage of commuter cars, it's kind of much more complicated than that. And there's actually a bunch of technologies that are going to fill different segments of the market.
Mm-hmm. So go ahead, Jay.
Sorry, I just want to touch on that hydrogen comment before we get away. Why do you say that for the fixed route?
Okay, so hydrogen, like, it's expensive in terms of the infrastructure. And if you look back, like, look at VHS and Betamax, and this is the example, the classic example, like, which technology was better? And some people will argue Betamax is better, but VHS was the adopted technology, and that's probably a little bit true for the lithium ion versus hydrogen. And so, but the debate is dead because the infrastructure for the lithium ion battery has been built. Now, there's still economies of scale though for these fixed routes, and when you get that expensive infrastructure in there, but it's heavily used because it's going to be, for instance, a train potentially, then the economics make sense. And with the passage of time, if we talk over a decade, it may also come to pass that construction workers and people using larger trucks are able to create routes that allow them to hook in. But what you're probably not going to see, at least as the technology currently stands, are hydrogen fuel refilling stations all over Portland, Oregon. Like that seems like that's not happening anytime soon, largely because of infrastructure cost. But when that semi and 500 other semis today are going to go down that route, then the economics make sense to put in that hydrogen infrastructure. And that's true, by the way, of a mine site. You have these big semis, big dump trucks. That's another application. Potentially shipping. So there are real world applications for hydrogen, and that technology will continue to evolve and develop, along with, as I said, lithium ion technology. And then, don't underestimate the power of the grid and what needs to happen there. And probably because you don't have weight and you don't have size as much of a constraint there, you have other technologies like vanadium redox that will come on to kind of control that market. And so it's a segmented market, and there's quite a bit more nuance there than most of these guys who are selling something would lead you to believe.
Okay, so I assume you're looking at all the battery metals, and you're probably doing some sort of from just hearing you talk, it sounds like you put a lot of thought into where the future is going, and I'm guessing that you've done some even just back of the napkin math on where you see demand heading based on the technologies that are getting popularized today. Which metals do you see the most sort of likelihood that we're going to have shortages in the future?
So shortages is a
opportunity for
question.
investors to get yield is effectively what I'm trying to
Yeah.
ask.
So shortage is like, there's a lot packed into that kind of word.
Okay.
You know, if you look at commodities, there are always outliers, but by and large, there are non-shortages. By and large, unless there's a disruption in the supply chain, but by and large, what you have is a repricing. So substitution happens as a commodity becomes more and more expensive. And, you know, it's pretty rare that there are actual shortages, because what happens is that commodity price moves up and then recycling becomes economic, for instance, or deposits that are what we would consider low grade today become high grade. And so what I would say is, I think that copper, you know, nickel, cobalt, and lithium will all greatly benefit from this transition to kind of a green future, as well as uranium. We can talk about why uranium in a moment. Now there are short-term implications, like with a cobalt and a nickel and a lithium, but ultimately over the longer term, there's plenty of those resources on Earth. It just becomes a function of at what price. In other words, at what price does it make economic sense to extract them from the ground?
Mm-hmm.
And so if someone is pitching this narrative that, oh, there's going to be a shortage of lithium, you know, that could be temporarily true in certain instances. But if you were trading around that, like, you know, you better rent that stock and not own it, because if you take the price of a commodity and you overlay a given equity that's linked to that, they're always, you know, they're correlated. And so I would just caution people, you know, thinking that the shortages would be indefinite if they emerge at all. I think it's going to be more a function of pricing, and they'll just price in a higher price, and then you can buy whatever it is you're trying to buy.
Mm-hmm. So, but I'm going to try to nail you down on this, but you're clearly looking at all the different metals. There must be some metals where you sort of see the opportunity as an investor based on the projects that are coming online, where you see demand going, that you're the most excited about. Now, obviously, you're chairman of Nickel 28, so I wouldn't shock me if your answer is nickel. But when you look at all these metals, which is the one that you are the most excited about?
Yeah, I would say nickel and copper. Those are two that I think it's very hard to substitute, you know, out of these processes. You know, I think lithium is going to have a moment, but what I would say about lithium is it's only a matter of time before direct extraction becomes a reality. If you look at the pressures being put on in South America, you know, imagine you're thinking about a high desert, right? And they fill a lake with water in a desert and they're evaporated out. There's all these caustic salts that are polluting the environment. So I think while in the short term there is pressure on lithium, for me, lithium isn't interesting, because the day that they crack direct extraction, the price of lithium and all the equities will go down dramatically, like literally the next trading period. That is in contrast to nickel, where we know a lot of nickel ore bodies exist globally. However, they are by and large called laterite, and the way that you extract nickel from a laterite ore body is through an HPAL process, which is high pressure acid leach, which has been one of the great destroyers of value over the last 20 years in mining, maybe the greatest destroyer of value. The majority of the projects have, you know, been billions and billions of dollars over budget. So nickel isn't one that easily responds. Copper, although different in extraction nature, the projects tend to be massive and require, once again, billions upon $1 billion of capex in years. So I think the latency for nickel and copper is different than potentially lithium and cobalt. And I would say, you know, cobalt is also interesting. It's much harder to play at. I can't really think of any companies that I would buy if I want pure cobalt exposure, mostly because actual cobalt comes out of the Congo. There are some smaller companies who are trying to extract in North America, but the amount that they're going to be able to extract is kind of a fraction of the overall global demand. And so I don't think that one's a little bit harder to get the exposure to.
Mm-hmm. Do you drive an EV?
I don't drive a car at all.
Oh, really? Yeah.
I'm one step greener. I drive a bike with my 2 feet.
Okay, so let's talk Nickel 28. So Nickel 28 is a streaming or royalty company for nickel projects. Let's start at the beginning. What exactly is a streaming company?
Yeah, so I mean, a streaming and royalty company is, in its most basic sense, a company that gives a project money, potentially for a commodity that's not a primary commodity. They're paying for it up front, and then if you do it right, you get it at a fixed price, and then if the price of that metal goes up over time, you get the change in price. I would say Nickel 28 isn't really a streaming and royalty company. We own 8.5% of Ramu nickel mine, which is, I think, the largest producer of MHP, which is a mixed hydroxide in the world, and that goes directly into the EV business. So, we produce nickel and cobalt today and have at steady state for, almost 7 years. And so it's a pretty interesting project. The reason, it has kind of been overlooked by the market, in my opinion, is simply because it was found and funded in a junior company, and our partner MCC, a large Chinese conglomerate, lent us money, and we're now kind of at the tail end of paying that back. And I think that first tranche is paid back, in the next few months. And once that's paid back, the company will have somewhere in the neighborhood of $8 to $13 million of free cash flow going forward. And so the re-rating associated with Nickel 28 really only now about to happen. And of course, with all these stories, you also need a nickel tape. And I think we finally started to have a nickel tape, not only around electric vehicles, but also just around the reopening of the global economy and stainless steel. So Nickel 28 really today, the majority of that value sits in that joint venture on one of the most important nickel cobalt mines in the world that it's currently at billions of dollars of capex spent. The balance of the portfolio are royalties on nickel deposits in Canada and Australia, and those are just options. One or two of them might be built through the cycle. Hard which one, I think maybe a Dumont, Turnagain in Canada are the most likely candidates, but the other exposure on some ore bodies in Australia. But I think when you're buying the stock, you're buying it, one, for just leverage to the price of nickel, and two, for the cash flow, which is kind of imminent now, nickel prices.
So you said $13 million in cash flow that the company's going to be generating?
Well, I mean, at nickel prices on a forward-looking basis from when that debt is repaid, 8 to 13 million. That's kind of the range.
Wow, for a $75 million market company, that's pretty exciting. So this just pulling up this slide here, we're talking about. So this is an actual JV, so it's not like a conventional like top line stream or something like that. You're getting like an 8.5% interest of the bottom line.
Yeah, exactly. And when we pay off, that loan actually goes to over 10%. So it's the only pure play nickel producer on the TSX, which is interesting. There's Sherritt, but obviously Sherritt is in Cuba and has an oil business, and a lot of non-Canadians can't own Sherritt because of the fact that it has that Cuban exposure, which is a feature of U.S. law. So if you really want to focus on a producer, this is sort of it. Now, there are exploration companies, there's some interesting exploration companies out there, but a company like Vale has a bunch of other exposures as well, and so that's kind of a unique feature of the leverage as well for the company, is that there just aren't a lot of other ones listed.
Mm-hmm. So that's pretty exciting. But what about the other projects you have? Which of these should investors be focused on outside of the?
Yeah, I mean, I think the two with the most value are Dumont and Turnagain. Both of those are large nickel sulfides, and nickel sulfides are easier to build than laterites because the process by which you extract the nickel is a known and definable process, whereas with nickel laterites it's much more challenging. Dumont is kind of permitted and really ready to go. It's owned by Waterton, which is a private equity firm in Canada, and then is owned by a Canadian public company, and it's further behind Dumont, but those are probably the two which are most likely to bring investors value in the coming years. The others are all, of course, of value, but they're not as far along the spectrum.
Okay, I love how you've or whoever did your deck sort of outlined the acquisition cost, and so now when you guys acquired that, was that sort of as like part of a stock transaction? Did the company pay cash for that?
So Dumont, it was a mix of paper and cash, and Turnigan was paper and cash. Of course, all of these assets are a spin out from an earlier iteration of the company, and so. But when they were purchased, I think just about all of them were purchased with a combination of cash and paper. But I think one of the important points to make here is there's no transactions that are going to happen in Nickel 28 now. The management team, including myself, we own almost 20% of the company. And for the time being, the company is dramatically undervalued just based purely on revenue and on those cash flows, which should come later on in the year. And so right now, we're not at a stage where we're even considering transacting. Just that's not the right time.
Is there a construction timeline for Dumont? The deck indicates construction ready, but are they proceeding there? Or?
Waterton is looking for a partner. Okay. I think I heard that they're engaged a bank, and so we don't control that process. We have the royalty on it. But if you were ever going to find a partner as a nickel company, right now is the time, right? With the EV theme happening, with the global reopening and stainless steel, so it's a great time to be looking. And so, Waterton is actively out seeking a partner, as far as I know.
How do you go about diligencing these projects to determine if back when you or your team put together this portfolio, how like what was the criteria you were looking for to determine whether or not it was the right fit?
I actually want to add one tidbit to that.
I think jurisdictions. You want to think these projects all have capex of over $1 billion, and so the world has become a little bit more challenging in terms of where you investing in the cost of that money. And so we tried to balance where we felt that a project could be built, like Australia and Canada. That was one kind of condition. Another one is, what is the grade? What does the ore body look like? What is the size of it? If it's a low grade laterite ore body in Australia, well, it better be massive, right? And so that was a condition. In Canada, obviously nickel sulfides were advantageous because those are much easier to build, and those stand a chance of being built. I highly doubt that, with the exception of the Chinese and Indonesia, that you're going to see any nickel laterite ore bodies built this cycle, which aren't already producing. So, while you layer in a few of those in Australia very cheaply, by the way, you probably wanted to focus on nickel sulfide projects in a jurisdiction like Canada.
So how exactly do you go about determining the price paid for an NSR to determine whether or not it's a good price?
Yeah, so a lot of it, I think, depends on the relative market cap of the company at the time. So right now we're undervalued. And so if you think about it, using your paper to do anything is extremely expensive. And so the best use of capital might be that the highest IRR might actually be buying your own shares back versus buying some other project. If you're getting a 10 or 12% IRR in a model for this new royalty, or you're getting a 30% IRR for buying your own shares, like the efficient use of capital should be buying your own shares. So one of the factors would be, at the time those deals were done, how do you view the cost of your own paper, and that also kind of drives the cost of capital. But I think your question is a great question, because it's very challenging to value on a royalty or a stream, in particular a royalty that might be 6, 7, 8, 10 years away from actually producing any cash flow. And so in a way, maybe a Black-Scholes model is a better way to think about it, because it's an option. Really, that's an option on the future, and it's probably not worth a heck of a lot for some of those that might be 10 years away. But in the alternative, if Waterton announced tomorrow that Dumont was fully funded, it's pretty easy to see how that's worth $40 or $50 million. So I think that's kind of the spectrum. And if you were building a streaming and royalty company, I think you want to layer in these options through time, and then some of them hit and some of them don't.
You kind of just lost me there talking about logarithmic math. I really want to get into that, but I think our audience is going to get too bored. Okay, so you got nickel 28. The next thing I wanted to ask you about was this article that you recently wrote about how the West needs to level the playing field with China. How do you sort of, not knowing a whole lot like myself, I read the odd tweet from Kyle Bass. How do you view China as a threat to the West, and how do you think that we should sort of defend our sort of position to keep our industries competitive here in Canada or the U.S. With China, which is growing, and I presume from a lot of stuff I read seems like there are some issues there, some problems. Let's get your take on sort of how you view China and sort of what we can do as a G7 set of countries or individual countries to try to level the playing field.
Yeah, well, first of all, I have an open mind here. I would argue that China is setting global environmental policy today. They're a world leader, maybe even the world leader in environmental global policy. You say, like, Anthony, you're crazy. What are you talking about? And what I'm talking about is the fact that they have fully committed to electric vehicles in China. They have fully committed to hydrogen. They've fully committed to vanadium redox batteries. And so, China, I'm there before COVID all the time. It's far more complex than it's depicted. They do have constituents, contrary to what is depicted in the media. They do have to react, and the Chinese people have been extremely upset by the pollution in the country. And so Chinese policy has really reacted, and they have completely outpaced the West in terms of the EV build out. And that's also generated a new agenda there. And the agenda is very straightforward. China was never really able to develop an automobile industry. As much as they tried, the products were either seen as inferior or, consumers didn't want to buy them. And so they've really seen the electric vehicle as their second chance of creating, a modern Detroit in China. And so they have really maneuvered the U.S. in terms of microchips and even basic stuff, like gone into Africa and South America and secured the supply, the basic material supplies needed to have an electrified grid and really an electric vehicle network. So it's a challenge because capital has a cost, and you're in the midst of a tech boom in the West, a SPAC boom, and an everything boom. It doesn't look that attractive to invest in a copper mine, right? Like if you're just some hedge funding in New York, it's not that attractive to you. And so you didn't invest in one. By the way, like no major new copper mines have come online or being built in the last 10 years, greenfield. And if you're China, on the other hand, you said, well, we're going to provide the money. We're going to make that cost of capital work. And so there's been a massive differential in the cost of capital. And China has just simply made the policy around cleaning up their environment. Definitively, they've done that. And they said, how do we achieve this? Well, we need to have electric vehicles, amongst other things. And we're going to go out there and we're going to fund that. And so the Treasury of China has gone out and bought assets globally through their companies and really secured the supply chain. And so I think they're at a 5 or 10 year head start to most US companies in terms of understanding that dynamic and really having a stranglehold, and one that's going to be hard to break because the cost of capital is totally different, and you just aren't building mines in the West with funding from, Carlyle or whoever.
Mm-hmm. So effectively from reading your article, what's happening, and I think you used Indonesia as the one example. And in that case, they were, was it nickel that they were getting from Indonesia?
Yeah, nickel.
So they'd approach Indonesia and they'd say, we're going to help finance a bunch of your infrastructure projects in exchange for, now was it just like outright nickel, or was it to have ownership in nickel companies?
There's a bunch of variations, and that's happened all over Africa as well. And it could be as simple as they're not connected. In other words, it's not you fund this and we get that. It's more like if you fund this, our company, there's a bunch of variations on it, but the funding of infrastructure in China, in Africa and Indonesia is directly correlated to those governments issuing permits. And let's be clear, they're building mines. It's not like this is some sort of a scam. It's just they're using their balance sheet to obtain the rights to those materials.
Mm-hmm.
And I think, one of the things I would want to get across to people, they got to understand is, what China is doing is it makes a lot of sense. And by the way, the U.S. government or the Canadian government could do the same thing. I mean, there's no reason why the Canadian government can't be the provider of capital to a lithium mine, a hard rock lithium mine in Canada, or to, why doesn't the Canadian government fund Dumont? It could do that if it wanted to, hypothetically. And if you think of it in those terms, that's exactly what the Chinese government is doing, because the Chinese government realizes that the country and the groups that control the basic materials for these batteries are going to be the ones who have that industry. And so right now, China has really done that, and they've gone out and they've controlled that.
It's an interesting way of looking at it. Like my understanding of lithium here in Canada is I think there's only been one company that's ever really produced lithium, or the one project that has, and it keeps, being brought public or ending up in different private hands, which is in Val-d'Or, Quebec, I believe. That makes a lot of sense if the government would step in and help finance these projects. And I think that the province of Quebec does to some extent. And of course, Nemaska managed to get SoftBank to give them a whole bunch of money. And
Nemaska was also
they didn't go well, did it? But this is kind of the thing is China doesn't want to sell you a battery. They want to sell you a car. Like this is really the goal. This is the aim. They want to sell you a car. They want to sell you whatever brand car it is, and they want to make that in China. And they're putting out their balance sheet. And I think what's happening is a lot of people are spending a lot of time criticizing China, but I think it's actually wrong. What the time should be spent criticizing the Canadian and the U.S. government or the European governments, because I think that's a more effective way to think about it, because in actual fact, they're not doing anything wrong or illegal. And in a way, they're really helping to push environmental policy globally. So people don't think about it in those terms. Instead, you have these U.S. politicians sitting around. And by the way, they're not without, let's be clear, they do a lot of things which around IP and that sort of thing, which aren't great. But instead of focusing on that aspect of it, I think it would be more beneficial to say, okay, we're going to be proactive now, and we're going to try to fund some of this. There are copper mines in the U.S. The U.S. Copper, it's a public company, has a project that could be developed in California, historically operating copper mine. Like, why not fund that? Or, there's Nevada Copper in Nevada, actually. So there's a bunch of these things that could be funded, which have not been funded by the government. They've been funded privately, and they've had to compete with effectively a cost of capital out of China.
It's funny you bring up Nevada Copper, because one of our loyal audience members, JTD, probably mentions Nevada Copper in our comment section at least once every episode. Okay, so what other topics did I want to cover today? Okay, so you're investing in these different areas. I wanted to get your thoughts on crypto and Bitcoin, because that's obviously really relevant. I don't see any of that sort of in your background, which is normally when I encounter people like Anthony Milewski, where you're dabbling in different parts of junior mining. I'll see your name attached to a cannabis deal and a psychedelic deal and a crypto deal, and I'm not catching any of that with you, which just kind of makes you a little bit of an oddball here in the Canadian junior markets. But I'm curious, what are your thoughts on crypto?
Yeah, I think it's really interesting. It's a unique moment. You have this wash of global liquidity, kind of 22-23% of all dollars printed have been printed in the last 12 months. You have inflationary pressure. CPI was 4%. It's probably more like 8%. And, it's confusing. And I'll tell you, I'm surprised gold hasn't done better. Gold equities haven't done better. And I think the reason is because those speculators. So the people who have to be in gold are in gold, and the speculators who would have piled into the equities, have piled into crypto. And so I think the biggest risk for crypto, and it is a real risk, is regulation. You saw Binance is getting investigated by the IRS and DOJ. The IRS has said in a number of different forums that they're going to actively go out and seek, anyone who's avoiding taxes. And I think that's probably the big risk, because it's not a currency in my view. It could become a currency, but in my view, these things are really risk assets. And my view is shaped around the following. If I buy a coffee at 9 in the morning and the coffee's $1.75, I don't want to go buy a coffee for 50 cents at 9 p.m. or, by the way, $2.50. And so I don't think it's a currency. I think it's a speculation vehicle, and there's nothing wrong with that. It'll probably go up. It'll probably go down. Maybe it's akin to the tech boom in the 2000s in America, which is to say that most of it gets blown up, and then maybe the Ethereum and the Bitcoins rise and become the winners here. That would be kind of the typical cycle that we're seeing for technology. But I just don't know. I mean, it's hard for me to have a view about why it's going to go up. There's not a supply-demand narrative. So I respect people who trade it. I mean, it is a risk asset, and more power to them. But it's just not something that I've been able to kind of get my head around in any serious way.
Yeah, I think that a lot of us sort of Twitter guys like myself and Jay, we kind of look at it, and it's hard to take it seriously. And even like the stuff that happened with Elon Musk, it's like it's like they take a bunch of cash on their balance sheet, they put it in Bitcoin, and then somebody sits down Elon and they're like, "Hey, Elon, you know how Bitcoin's made, right?" They're like,
"Yeah, the ESG
components.
Thing. I mean, this is crazy. The amount of power wasted. I actually, that Tesla's basically only profitable because of carbon credits that they sell. So I mean, it's insane that he's buying. Now that's changing with staking, and there's some proof of stake and all that kind of stuff that maybe will change crypto. Look, I think crypto is not going to go away. I just think it's early, it's evolving, and what it looks like in 5 years is probably something really different. But if you stay on top of it and trade it, I think you probably can make money. It's just, by the way, look at copper, look at a bunch of commodities they're up to, and I know these names, I know the underlying commodities, and so for someone like myself, it's easier to stay focused in something than in something you don't totally understand.
The carbon credit stuff, I want to get into on a different show when we have you on, because I know that you're working on something in that area, and that's something that is really fascinating to both myself and I know Jay, who's actually one of those Tesla bears who loves trolling all the Tesla fans. So let's save that for a whole different episode. But one last question I got for you here. What do you think sort of is the key to accelerating a decarbonized, greener future? What is it that we really need to see happen? Is there one thing that or is this just sort of a culmination of things that have to go right?
I think it's just public, I think it's the desire amongst just regular people to do it, whether that's offsetting your carbon footprint, whether that's buying an electric vehicle, whether that's buying products that are seen to kind of be environmentally friendly. And I think it's happening. I have kids and they watch The Blue Planet, and you got the British voice guy talking about the decline of animal population. So I think it's happening. I don't know if it's happening fast enough, but one of the things I say, you have these people who don't think that climate change is real. I say, fine, you don't have to believe that, but let me ask you a question. If I came and dumped a garbage can full of garbage on your head every morning in your bed and just left it in your bedroom, would you want to sleep in that bedroom? Would you want to eat food or grow food out of that bedroom? The answer is no. And so even if you don't have a view around global climate change, you certainly can have a view around pollution, right? You don't have to have it. You just have to be alive to know that dumping all our trash into the ocean, the plastic, is bad. And just if you have a hard time getting your head around about it, just think about if I was pouring garbage out and you were living there and eating there. And that's what we're doing. And so I think people are aware of that as they become more aware and more willing to make choices that reduce carbon footprints, but also just the consumption or the way that we consume. I think that those are all steps in the right direction.
Okay. Well, thanks so much for taking the time today to join us. I'm hoping you'll come back and we can sort of really do a deep dive into the whole carbon credit space, because I don't really know anything about it, and I'd love to learn more about that area. And Nickel 28, you've got me all excited now when you're talking about $13 million in potential cash flow for a $70 million market cap company. That's the kind of stuff that we love looking into. So thanks so much for taking the time to hop on today, and hopefully you'll come back on in the future and we can get into the carbon credit stuff.
Thanks for having me.
Awesome. Thanks so much, Anthony.
Cheers, mate.
Okay. Well, Jay, we got about 15 minutes here to run through the Canadian news, Canadian venture and small cap news. What stories this morning caught your eye?
Where do you want to start? I mean, I'll preface anything here with it's a Friday, so excuse me, it's not going to be as busy. Bunch of earnings this morning. Grand Columbia Gold, Victoria Gold Corp, who's up in the Yukon. Actually, you know what? Let's start with Mercer Park. This was actually released last night. So if everyone recalls, we had Kyle Kazan on.
Yeah, Kyle Kazan came on. He was a bit of a zany character. He was
very upbeat.
Former police officer, I think
real estate investor,
physical ed teacher, real estate investor.
Yeah, and then I could talk with them for hours on real estate alone.
turned CEO of a cannabis company in California.
Yeah.
So they had a SPAC deal with Mercer Park. What happened there? Did you cover it today?
I did. Went out.
You cover so much, I can't even find it on the website.
8:52 a.m. if you're looking for. Yeah, well, I will say this before we get into it. Next week going to be busier. We have another writer that will be coming online, so it's going to just be article after article every morning now. Not like it wasn't already, but you know what I mean. Anyway, Mercer Park this morning sees $224 million in redemptions ahead of qualifying transaction. So this is a company that had raised roughly $470 million through a SPAC offering. For those of you that don't recall SPACs, the standard is $10 a unit. Each unit has a warrant and a share attached to it. I believe that was the same case for Mercer Park. Mercer Park last night announced that they are delaying things by a couple of weeks. No big deal. But really what the big story was in this was they announced that a total of 22.4 million Class A shares were redeemed. What that means is effectively before the qualifying transaction closes, investors that initially put money into the SPAC or the special purpose acquisition vehicle, they are able to go, no, I'm not interested in this. I want my money back. So effectively 22.4 million units have seen them redeemed, as in the money has left the vehicle, with investors just holding the warrant now. So effectively, that's $224 million that has left the bank account of Mercer Park, which will not be around for the post-acquisition company. So what that means is right now Glasshouse has a total of, I think it's $266 million to play with, which includes their PIPE financing for $85 million. So excluding that, a lot of the original SPAC investors are pretty well gone. Of that $470 million, effectively there's like 180 some remaining, which is notable because for this deal to close, they need something like 150 million in total. So more redemptions could happen, and depending on how much, it could just put an end to the whole SPAC transaction. So
wow,
we'll see if Glasshouse does proceed. What's the number here? 119 million in cash. So I mean, quite a bit more would need to be redeemed, absolutely. However, this company that thought they'd have 300 some million if no redemptions occurred is now going to be into double-digit millions, most likely at the current rate. We'll see.
Yeah, it's definitely not good news. But this seems like a very, what I found kind of weird about it, and like, look, I have not done a ton of homework on this deal, so I don't want to say anything that's remotely disparaging to investors or the people behind the deal. Kyle seemed like a good guy. Is that it seemed like a really good bolt-on for another MSO, where we've got all these MSOs that don't really have much exposure in California. Like, I just get the impression that if I'm a True Leave or a Green Thumb or an AYR Strategies or Air Strategies, I guess they call it, terrible name. I'd be looking at that one and kind of going, okay, this is a nice bolt-on for my deal. So I think that's probably a good thing for another MSO if this deal doesn't happen. But I mean, what's the deal? There's got to be a pipe associated with this, right?
85 mil.
That's all they have in a pipe?
Yeah. I don't think they actually classify it as a pipe. I think it's just like a private placement.
Yeah,
I mean,
well, that's still a pipe.
Right? What it actually is there, but
a pipe's just a private placement, right?
Is it a private investment in public equity?
Yeah, but like really, like essentially,
really,
it's just a private placement.
Yeah. Anyways, I'm going to be honest with you. I'm a bit skeptical to a certain degree, just because all these big greenhouses in Canada, now I know it's Canada, not California, much different. The market in California is multiples bigger than Canada alone. But I think investors are probably a bit skeptical about the size of the single greenhouse, right? Look at Aurora, look at Canopy, all those large ones got closed down, and I think that might be some of the apprehension. Now, Kyle says that they've effectively learned how to do it properly, which is something that Aurora clearly didn't do. And I mean, if the demand's actually there, then the demand is there, and that's all fine, right? So we'll see.
Okay, so the next story I would like to cover, if you're cool with it, Supreme Cannabis. We're going to the weekend. Why not go in on a high note talking about Canadian cannabis earnings, which are always exciting and never, declining. So take it away, Jason. Tell me about
Supreme's just the same story as all Canadian cannabis. Revenues are down this quarter. 22.6 decline quarter over quarter. I was rather straight to the point. The company remained unprofitable at a basic level during the quarter. They had 3.6 million in gross margins and operating expenses of 7.3. I'm gonna be honest, I get so freaking frustrated with so many of these companies, because it's like, if you were not public, you'd be gone. Right? I think that's one of the problems with public equities is there's so many companies that aren't even really real companies. Sure, Supreme has like revenue generation, but are they a real company if they can't even keep themselves afloat without constant infusions of cash? Like, who's putting money into these things? What the hell's Canopy doing buying this? Like, further to that point, what the hell is Canopy doing buying any Canadian cannabis? We want to be number one in a market that's not working for anyone. Like, how about you just sit back and you cut things back and make it work?
Yep, I agree.
Right? It's garbage at this point.
Hexo's found a way to make it work. They're going to make CBD drinks out of Colorado. Covered that one yesterday, but.
Actually, that was this morning. They purchased a production facility that's supposed to close in I believe it's their fourth quarter. Again, like, Hexo's late to the party. Who cares? CBD drinks didn't work for anyone. So why is it going to work for Hexo? What? Hexo has proven they can't do anything proper.
Why do I need CBD in my drink?
I'll be honest with you. I will say,
just to be clear, you're being honest with me.
I do buy one can of a CBD drink every month, basically, because it helps with my knees that are terrible from sitting in this desk for hours on end. But I only need one a month. That's not a business strategy for anyone.
But why do you need
if it doesn't come in as CBD? Just because it's easy. I mean,
but why not just CBD pills? Why Why
Well,
not?
like I could do that, but because I'd rather drink it. I mean, if the pill was there, I'd take the pill. I don't care, right? But you're right. Who needs it in the drink form? I just buy it because I'm at the dispensary already, and I like cannabis beverages, so I'm like, okay, I'll get that. Now, to be clear, no cannabis beverages in Canada are actually good yet. I'm still waiting on Tinley.
James are saying, is that the real reason?
Oh yeah, I didn't realize he was watching there. But yeah, like it's Hexo's just trying to say that they're a multi-state operator, that they all have operations in the U.S. It's gonna be like Canada. It's gonna suck shit. Sebastian will write a book that says he has $1 billion startup when it's finally released, it won't even be worth $1 billion. You know, like so many of these companies are just a joke at this point.
Yeah, and James Garner, he's really laying into you. He says at least he's not working on the poll.
Oh, that's all right.
Sorry, I just really wanted to play a sound effect.
I know you did,
because it's it's Friday, and that means we get to play this song.
It's Friday, gotta get down on Friday.
anyways.
Let's get into this next story. Hyundai, they commit to. Sorry, how do you pronounce it?
I say Hyundai, but it could be wrong. It could be Hyundai.
I used to drive one. You know that.
I know you said drive one. That doesn't mean. You know, people pronounce Audi wrong. Audi is not right. It's Audi.
I've never known how to properly pronounce it. I just say Hyundai, but I mean Hyundai sounds right. Like if I was gonna do the impersonation, or if I
knew you were going there, and that's why I stopped.
How I think that the accent would work. But hey, what do I know? So look, they're looking to invest $7.4 billion in electric vehicles. Thanks for showing up, Hyundai.
Ad blocker. Why did we get ad blocker on our website?
No. Oh, yeah. I don't know. But the ad blocker is a little bit unhappy with me. Apparently, they want me to pay, and I don't like.
Oh, maybe that's what was to send a pop-up.
I don't like ad blockers. I don't like the idea of them. But YouTube sometimes gets out of control, where it's like I can't get like 30 seconds into a video with a commercial, and then like a minute later, it's in like the commercials are always happening while somebody's mid-sentence.
I will say that is actually the content provider that's doing that. They get to select the frequency of advertisements. It's not necessarily always YouTube.
Yeah,
but yes, it's a pain in the ass.
They're the ones who make it so that I have this need to go and download an
and then they get nothing.
And the other one, and by the way, JTD, if you're watching, I'm going to assume you agree with this, is sportsnet.ca. When I go to their website, this ad pops up half the page, and I can't like it's so hard to read. It's like I can see like 10 words. I gotta keep scrolling down, and then like 30 seconds later, this ad goes away.
Your monitor, like get it.
I got huge monitor. Like in this organization, the higher up you get, the more monitors you get. I got 5 monitors in front of me, 3 behind me, and a TV in the wall back there. And I got a new monitor to set up. That's a teleprompter monitor that I haven't even. It's just sitting in the box right now. So the answer is I'm fully prepared for whatever you want to bring me, Sportsnet.ca. But you know what? Instead, I chose to get an ad blocker because you kind of ruined my sports reading experience. Not that I go to your site very often, but when I do, it makes it a unreadable experience. All right. Jason, what can you tell me about this commitment that Hyundai
I'm going to be honest,
has
I didn't read the story, so not a whole lot. $7.4 billion investment. It looks like they're partnering up with Kia Corporation, who is another South Korean manufacturer. This announcement was ahead of a scheduled state visit between the South Korean president and Joe Biden. Biden notably has called for $174 billion investment into the electric vehicle industry within the U.S. So it looks like they will be producing vehicles jointly together. I can't remember if there was a specific state where they said. Hyundai is currently in Alabama, Kia in Georgia, so I imagine it's going to be somewhere between the two. Yeah.
Okay. something that I thought was kind of interesting, and I don't think you've covered it on the dive today, but it should have been covered if.
Well,
I just
you could.
I could have sent it to you. I just found out about it like an hour ago, but that's that Fisker Foxconn news. I think that this is really...
you mentioned it earlier with Anthony. I don't know if we were on air or not for that part, but you kind of caught me by surprise when you said that. I was like, oh, missed that one.
Well, this is so we got Project Pair. Fisker and Foxconn build the sub $30,000 EVs in the U.S. Fisker in February announced it would work with Taiwanese contract. This is the largest contract manufacturer in the world, Foxconn, to realize an affordable mass-produced electric vehicle for launch in late 2023. On Thursday, the two companies provided an update on the plan, including confirmation the vehicle, code-named Project Pair, will be built in the United States and have a price tag of less than $30,000 before incentives. A specific site for production is still under evaluation. The vehicle's code name is an acronym for Personal Electric Automotive Revolution, and Fisker is looking to build as many as 250,000 units annually for global sale, with the company planning production in other countries should demand reach those levels. So I think this is interesting.
A couple things here. First and foremost, replace Fisker with Tesla, and this article came out like 10 years ago. Foxconn, obviously not, but I think it was Toyota instead. I mean, they had the same sub 30,000 sales pitch, and I don't think Tesla got there yet with the Model 3. I could be wrong. Second, I am skeptical that the U.S. government is going to allow Foxconn to operate in the U.S. I imagine there's going to be all kinds of regulations related to it being a Chinese company, and I'm sure there's connections to the government there. Right? Like, I could be entirely wrong, and that's fine, but it's also different because Biden's in office. If Trump was in office, I'd be much more adamant on this. But I mean, it's good, but I'm still skeptical. Fisker does not have a good track record. Sure, as we identified in our deep dive a few weeks back, whenever that was, it was a separate company, but Fisker does not have a good track record overall. At least the brand name, it doesn't.
Yeah. I think
now Foxconn is notable.
Yeah, look, I think it's interesting. If this works, this has got to be incredibly scary for Big Auto. I don't think it's going to work. I'm
going to ask you, why is it scary for Big Auto?
Because it means that pretty much anybody who's got a little bit of capital can go and build a car with contract manufacturing. And, who knows? Like, we were joking about having a deep dive pen. Could we have a deep dive electric vehicle?
I am skeptical that a Fisker automobile is going to be up to the same standard as, at a $30,000 price point. I'm skeptical that's going to be comparable to something from Big Auto.
That's a good point. It's just that easy. It's just that easy, folks. You can do it with limited resources. Go and contract somebody else to go build your vehicle. The next thing you know, you're pumping out 250,000 of these things at a sub $30,000 price tag.
Yeah, like if it was that easy, Tesla would do it.
Deep dive would do it.
They've struggled. Love them or hate them, Tesla has done a lot, but they have struggled to get that sub $30,000 price point. That's just a fact.
Yeah.
On top of that, do you think Ford, GM, Toyota, Hyundai, Kia, Volkswagen especially, you think any of them would not have done it already? Especially the likes of Ford, GM, and Volkswagen, who are known for having economical cars. If it's that easy, it'd be done. Right? Mm-hmm. Actually, Toyota is probably the best example. You think they wouldn't have a sub $30,000 Honda Civic by now?
But you know how retail investors are. The second that they see an EV deal, it's...
Shut up and take my money.
Yeah.
It's the perfect sound effect for EV SPAC deals.
Yes.
Okay. So let's wrap it up here. It's 1:00. I got this afternoon in the city. I'm heading back into Toronto later today.
To old stomping grounds, eh?
I went to actually, this is my second time this week. I drove to a globally local this week, and I tried the famous burger.
Oh, you didn't even tell me about that, man.
Yeah, it's because people don't know this, but every Wednesday night I force our whole staff to get on call, and it's like 12 of us, and we do a chapter of the Canadian Secure course because we're nerds at. And
I miss this.
and I told the story, and I have to say I was very unimpressed, underwhelmed by Globally Local. I took a buddy who's a culinary guy, and the famous burger was like taking a bite of dough. I was
Really?
yeah. It was
Well, we're gonna have a chat with Cassandra, who said it was so good.
She never really said it was so good. She's just like,
No, she said the fries were really good. That's what it was.
yeah, the
Were the
fries.
fries good?
I didn't get the fries supreme. I got the mac and
Why
cheese.
did you get fries?
I ordered a whole bunch of stuff. The pulled pork was interesting. The pulled pork was like, I think someone said it was spaghetti squash, and they covered it in a pulled pork sauce and they put it on a bun, and it felt like you were eating pulled pork, but you could tell you weren't getting all the calories. So it was almost kind of like drinking diet pop for the first time, in the sense that like it kind of felt like I was drinking pop, but like there was something that just felt.
But you knew it wasn't. You knew it was, yeah.
Yeah, that would probably be the best way to
Why would you
describe
call
it.
it pulled pork? Pulled bork or something should be.
I don't know what it was called. It maybe wasn't called that.
Oh, sorry, that was you. I thought that was what it was actually called.
Yeah, I don't know what it was called, but I didn't walk away going, okay, this place is incredible. But I'm fascinated by the space. I think that there's tremendous investor interest in plant-based deals, and I hope that they are successful because I think that they can get it right, and I will be continuing to watch this deal because I genuinely think it's fascinating, and they're in the right place, probably at the right time. But if this company isn't successful, it will be either because they're a little bit too early, or they don't model right. But there's certainly the capital behind them and the interest to make it work. All right, Jason, what's going on at the dive this afternoon?
This afternoon we have the CEO, Sina Habibi, I believe is how you pronounce it. Apologies if I got it wrong. Of Cognitivity Neurosciences on the daily dive at 1:30 with Cassandra. On top of that, I have all kinds of stuff scheduled for this weekend that I can't even pull out one thing. Hype Blockchain tomorrow is our featured full analysis from Jim McFadden. Also got some stuff on a couple mining companies and tons of macro, tons of analyst coverage. Stay tuned.
Listen, folks, nothing we talk about is a buy or a sell recommendation. If you're looking for that sort of thing, go find somebody who's licensed, not somebody like myself or Jason. We're not licensed. We're just a couple of ding-dongs. JTD, Jay's gonna win this weekend. Who do we got? I don't even recall. Just sweeps series against the Atlanta Braves. A 4-run ninth. Pretty exciting stuff. Jay is on the edge of his seat here and just watching me talk about this. Look, guys, you could have spent your last hour staring at any screen, any place in the world, but you chose to spend it with us. I sincerely appreciate that. We got a big week next week. We got Michael Miller joining us one day. I was looking at the calendar, and I get pretty amped up. I
thought I saw his name on there.
I
We've
love
also got a
having
daily
Michael
dive with Michael Miller, so I got to coordinate that so it's not the same day. But that'll be good.
And we got the Phillies. The Phillies. So, look, guys, enjoy your weekend. Go spend time with the fam. If you got a pool, maybe open your pool up this weekend. You got a lawn, go buy some fertilizer. Put some fertilizer on the lawn. I don't know.
Watch those wrists, though.
All right. Enjoy your weekend, everybody. Thank you for taking the time to watch, and we will be back Monday at noon. Thanks, everybody.